Hello everyone. This is the pre-market report video for today, 24th February 2025 for the Indian stock market in terms of Nifty and Bank Nifty. In one simple sentence, last Friday US market had a disastrous day. Before their market opening, lot of macros related to US economy was released. For example, February month S&P Global's manufacturing PMI came as just 50.4, marginal expansion, which was way less than the January month value 52.7. Then the more serious one was service payment data. It actually fell to 49.7 in the February month. As we know, less than 50 meaning contraction. The more negative scenario here was analysts expected the PMI value as 53. So it's a disastrous macro, especially 70% of US economy is based on service sector. This made the US market to open negative. Then at 10 a.m. Eastern Time, Michigan University released a lot of their projection. First, 12-month future inflation expectation, next year 2026 February month inflation, they projected it to come around 4.3%. Earlier in January month, for January 2026, they projected only 3.3%. Now, because of all this Trump tariff and so on, they are projecting it to increase back above 4%. Here, I don't need to explain any. Fed was targeting 2% inflation. If inflation comes above 4% means then Fed will start to increase the interest rate instead of cutting them. In addition to this high inflation projection, University of Michigan's US consumer sentiment deteriorated further in February month to 64.7, 12-month low value, whereas in January month it was 71.1. So lot of US macros was released during last Friday night and all of them were much more negative than what market anticipated. As a consequence, US market literally crashed. Dow Jones down by 1.69%, S&P 500 was down by 1.71%, and because of interest rate increase fear, Nasdaq underperformed, closed negative 2.2%. Just for comparison, in Nifty perspective, 2.2% drop will be equivalent to 500 points down in one single day. On Friday, Nifty closed 22,800, so it's equivalent to closing today for 22,300. So that much was US market negative on last Friday. In case of US VIX, it increased around 15% and moved to above 18 from below 16 on last Thursday. Again, this negative consumer sentiment in US dragged down the oil price by over 3%. WTI crude traded around 70 US dollars per barrel and Brent crude traded at 74 US dollars per barrel. Regarding Indian ADR, in line with the US market, all crashed. Only HDFC Bank closed less 0.5% negative. Wipro ADR was the major dragger, down over 4%. Then if we calculate the arbitrage considering the dollar premium, apart from Reliance GDR, all indicating the negative difference of about 1%, which is not good for our market today. And about GIFT Nifty, Saturday early morning, it closed at 22,617 and as per Friday spot market, at present there is no premium, so equating that, which indicates over 200 points gap down opening. Anyway, now coming to India related info. For a second, let's forget about US market. Last Friday, Indian market was also in huge pressure, which most of us know now. At that time, S&P Global released the India related PMI data, which was really good, but for some reason our market just ignored it. Manufacturing PMI data was maintained at 57 but slightly less than 57.7 on January month, still very reasonable, good expansion. Then coming to service PMI data, it jumped to 61 in February month from 56.5 on January month, massive expansion in the service sector. So this is really good PMI data. In addition to this, S&P Global report mentioned that India's employment was increasing at the fastest pace from their survey began in 2005. They also said India's business confidence was high and for the first time since October, the sub-index for output price exceeded its input price, meaning Indian companies expect to get more profit margin. So basically, in contrast to US PMI data, India's PMI data was very good, but as I said, our market ignored it. Second info, on Friday evening, RBI made an announcement that they're going to conduct a massive 10 billion US dollars 3-year dollar rupee swap auction this week. So this will infuse 87,000 crore rupees liquidity into the Indian banking system. Hence, from that perspective, it's positive for banks. But there are my reservations. I mean, RBI released this statement on Friday evening itself, so we should see some of its influence on Indian ADR. Again, at the same time, last Friday, US market was disastrous. Hence, it's unfair to expect Indian banks ADR to trade positive. So, I expect this will make our banks to be on focus today. In addition to this, last Friday evening, RBI released their last MPC meeting minutes. As per that, in short, RBI interest rate panel now shifting their focus to growth as inflation looks dropping, which means they are signaling more interest rate cut in future. Again, I expect it as positive. Let's see. Coming to participant-wise open interest analysis, in the index future market, proprietary traders increased their long position to 63% from Thursday end 58%, whereas on the other hand, both FII and retail traders maintained their respective stance. Then in the index option market, retail traders holding net 9% bullish open interest position, and on the opposite side, FII increased net bearish stance open interest to 5%. And as a hedge to future open interest, proprietary traders sold call options. Overall, retail positive stance, FII negative stance, and proprietary traders neutral with negative stance. As a summary, US market crashed inline with that GIFT Nifty and Indian ADR all indicating the gap down opening. However, as I said, there are a lot of local positive macros. Let's hope it arrests the fall. In addition, Indian pharma companies released the statement that despite the US tariff, still they are holding the price advantage. So we can expect pharma stocks to be on focus. And one more thing, Germany's election was held during the weekend and their conservative party comes on top. So today in the afternoon, if Germany forms the stable government with coalition means, then that will be positive for Europe. So please keep tab over there for any development in the afternoon. Just for info, at present, US future market is trading 0.5% positive. Moving on, as per stock of interest, Marico, Phoenix, Lupin, M&M, Power Grid, Muthoot Finance and NHPC got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, JSW Energy, Torrent Power, Acre Motors, Paytm, SBI Life Insurance and ICICI General Insurance got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, macro-wise, there is nothing that I'm aware of before and during our market hours scheduled release that can influence the market. However, in the aftermarket hours, immediately at 3:30 p.m., Europe consumer inflation is due. Then in the night for US, 2-year note auction are some of the things we need to keep an eye out today. Coming to technical, last Friday, Nifty opened 60 points gap down and was under pressure throughout the session, then closed at just below 22,800. Thus, on the daily chart, Nifty formed a bearish candlestick pattern with upper and lower shadow, resembling a high wave pattern, which indicating its high volatility. In addition, it sustained below all key moving averages as well as below the resistance trend line with a negative crossover in RSI and MACD momentum indicators, technically all signaling more weakness. However, Nifty managed to defend the 22,700 support, which coincides with the downward sloping support trend line. Hence, if Nifty decisively breaks this support, the fall may extend down to 22,600. However, in case of a rebound in the near term, 23,000 to 23,100 might act as the key hurdle. Above this level, the short-term up move could be seen towards 23,200, the midline of the Bollinger Band, and sustaining above that could signal the beginning of a new uptrend. In case of Bank Nifty, similar to Nifty, it also opened 200 points gap down and was under pressure throughout the session, then closed at below 49,000. Thus, on the daily chart, Bank Nifty also formed a similar pattern like Nifty. In addition, it moved closer to the lower end of the Bollinger Band and was below all the key moving averages with a negative bias in RSI and MACD momentum indicators. So, similar to Nifty, all indicating weakness. However, Bank Nifty maintained Wednesday's low of 48,800 on the closing basis. Below this level, further downside towards 48,400 is likely, and on the upside, 49,600 is the resistance. On the options front, the maximum call option open interest was at 24,000 strike, followed by 23,000 and 23,500, with maximum new call option rating at 23,100 strike, followed by 22,800 and 23,000. On the put side, the maximum open interest was at 22,000 strike, followed by 22,500 and 22,300, with maximum new put option rating at 22,500 strike, followed by 22,300 and 22,800. Thus, from options data, Nifty might remain in the 22,500 to 23,500 range in the short term. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.